Hey everyone, welcome back to the channel. Today, we're diving into retirement plans, a crucial topic for anyone preparing for their insurance licensing exam or just looking to understand how retirement savings work. I'll break down 15 key terms you need to know, and I promise to keep it simple and easy to understand. Let's get started. 1. 401k plan. First up, the 401k plan. This is a retirement savings plan sponsored by your employer. You contribute a portion of your paycheck before taxes are taken out, which means you save on taxes now. You only pay taxes when you withdraw the money during retirement. It's a great way to grow your savings over time. 2. 403b plan. Next, the 403b plan. This is similar to a 401k, but it's specifically for employees of public schools, tax-exempt organizations, and certain religious groups. Think of it as a 401k for teachers and nonprofit workers. 3. Defined benefit plan. Now let's talk about the defined benefit plan. This is a traditional pension plan where your employer promises a specific benefit amount when you retire, based on factors like your salary and years of service. It's like a guaranteed paycheck in retirement. 4. Defined contribution plan. On the flip side, a defined contribution plan is a retirement plan where the contributions are defined, but the benefits depend on how much is contributed and how well the investments perform. Examples include 401ks and 403bs. 5. Employee Retirement Income Security Act of 1974, ERISA. ERISA, or the Employee Retirement Income Security Act of 1974, is a federal law that sets minimum standards for most private industry retirement and health plans. It's designed to protect employees by ensuring their retirement funds are managed properly. 6. Keogh plan. Ever heard of a Keogh plan? It's a retirement plan for self-employed individuals. Contributions are tax-deductible, and the plan helps self-employed folks save for retirement just like employees do with 401ks. 7. Non-qualified withdrawal. A non-qualified withdrawal happens when you withdraw more money from your retirement account than you've contributed. The earnings portion of that withdrawal is taxed as ordinary income. So be careful with early withdrawals. 8. Profit-sharing plan. A profit-sharing plan is a retirement plan where employers share a portion of their profits with employees. The amount you receive depends on the company's performance and the plan's rules. It's like a bonus for retirement. 9. Qualified plan. A qualified plan is any retirement plan that meets IRS guidelines and receives favorable tax treatment. Examples include 401ks, 403bs, and pensions. These plans help you save for retirement while reducing your taxable income. 10. Qualified withdrawal. A qualified withdrawal is a tax-free distribution from a Roth IRA. To qualify, the account must be at least 5 years old, and the withdrawal must be for reasons like disability, death, or buying your first home, up to $10,000. 11. Rollovers. Rollovers happen when you move funds from one retirement account, like a 401k, into another, like an IRA. This is common when you change jobs and want to keep your retirement savings in one place. 12. Roth IRA. A Roth IRA is an individual retirement account where you contribute after-tax dollars. The big perk? Your earnings grow tax-free, and withdrawals after age 59.5 are also tax-free. It's a fantastic option for tax-free retirement income. 13. Savings Incentive Match Plan for Employees. Simple. The Simple plan is for small businesses with fewer than 100 employees. It's a tax-favored retirement plan where both the employer and employee can contribute. It's easy to set up and manage, making it ideal for small businesses. 14. Simplified Employee Pension, SEP plan. A CP plan is a retirement plan where the employer contributes to an IRA set up for each employee. It's simple to administer and great for small businesses or self-employed individuals. 15. Traditional IRA. Finally, the traditional IRA. This is an individual retirement account where you contribute pre-tax dollars. Your contributions grow tax-deferred, and you pay taxes when you withdraw the money in retirement. It's a classic way to save for retirement. And there you have it. 15 key terms about retirement plans that you need to know for your insurance licensing exam or just to understand your own retirement savings better. If you found this video helpful, give it a thumbs up. Subscribe to the channel and hit that notification bell so you don't miss any future videos. Thanks for watching, and I'll see you in the next one.